In this video, we're going to be talking about Sundial Growers, more specifically what their chart is doing and what you guys can be expecting for the rest of the week for Sundial Growers. But before we get into the technical analysis of Sundial Growers, me and you, need to talk about something specifically in the financial YouTube community. And what I'm about to say might not sit well with some of you guys, and that's totally fine. I am well prepared, but it's just something that I think we need to address because I think we do. So YouTube is a business, and some creators, depending on their size, get paid from you clicking and watching their videos, which means that the thumbnail as well as the title of the video needs to be eye-catching to get your attention and to have you click on their video. Now, the whole reason that I'm even bringing this up is because I got curious yesterday, and I basically just searched on YouTube SNDL stock because I was curious. I don't really watch other creators' videos on other stocks because I do my own research. And so just quickly looking at the thumbnails and the titles of the videos, it was pretty apparent that they were just trying to get you to click on their videos. Now, I'm not going to call anybody out. That's not what I'm here to do. I'm not going to drag anyone through the mud. I just want to basically bring some attention to this and to keep you guys aware. So the video that I ended up watching yesterday had a thumbnail as well as title that basically said it was about Sundial stock, and it had like the $5 price target coming. And I've watched a few of this guy's videos before, and it's not just him, it's everybody. It's most people. Sure enough, I click on the video and I watch it, and he mentions nothing about $5. He does give a price point, or it's like 100% below $5. He doesn't even mention it. And so he only put that $5 price target or $5 coming soon in his thumbnail, in his title, because he knew that human curiosity would take over and you would click on that video. Because unfortunately, at the end of the day, to some people on YouTube, that is all you are. You are simply just a click and a view. Again, I cannot speak for anybody on YouTube, but I know that for my videos, for my thumbnails, for my titles, as well as my content, I try to be as open and honest as possible. Yes, I do try to make my thumbnails as eye-catching as possible because I am competing against those people. But eye-catching does not necessarily mean dishonest. Obviously, if you're searching for the stock and you have exposure to the stock, sure, of course you're going to want to watch a video that says $5 coming soon. Nobody on YouTube knows where the price is going or what the price target is going to be. But they do know that if they put that somewhere on their video, that you will probably click on it because you want that stock to go up to $5. And I mean, I'm going to be very honest with you. Sundial could very well go back to its pre-spike levels. The fundamentals on this company are not good. And I'm not saying that you can't make money with this stock, and I'm not saying that you shouldn't be in this stock. I'm just advising you as a non-financial advisor to be careful about who you listen to and if they have your best interest in mind or if they simply just want you to click on their video, because I get comments like this all the time on my videos. And I think that's the reason why I'm even bringing this up, because these comments are basically telling me that there is a lot of dishonest and clickbaity people in the financial YouTube space, right? I am not in the business of selling you hopes and dreams for a stock. I am in the business of selling you, hopefully, reality and unbiased opinions on whatever stock I'm talking about in that video. So if you are still here and you listen to this rant, thank you very much. Again, I'm not dragging any other YouTubers through the mud here. I just want to bring attention to it because Sundial is a highly searched stock and other YouTubers know that. And that's enough ranting. Let's look at what the stock has done so far. We are looking at Sundial's chart right now. Currently, we have the 20-day 1-hour chart up on the screen right now. And actually today, what's happening today down here is actually huge for the stock moving forward. And I will touch on that in a little bit, in a couple seconds. But just looking, let's just draw some quick Fibonacci retracements right here, just to, put in our support and resistance lines moving forward. The low on this chime table is 84 cents. So you can see right now, the past basically 2 weeks, we have been trading in between this bottom to support and resistance levels. So 179 would be the resistance, and then 84 cents is the bottom support. There is more established support at the $1.10 level, which I'm just going to draw in really quick. You can see that it not only hits it back here before the spike, but it came down and touched it mid last week. And this price level actually goes all the way back into the 180-day chart. But just for time's sake, you can just go look at that yourself, or you can trust me. But the more important thing that we need to look at right now is this red line is indicating that the stock, after the spike to the moon and came back, the stock has been in a downtrend, and I don't think that would be surprising to anybody that's been following the stock. It hasn't really been going up, and it hasn't really been making new highs since it came back down to earth. And as you can see right here, it hits off of this resistance line again right here, again right here. Okay, so what we're currently going to do is we are going to zoom in on today and yesterday to get a closer look as to what's been going on. So this black bar right here is Monday, March 1st, and this black bar is currently today, Tuesday, March 2nd. As you can see, we are not done yet, as it is around 12:50 Eastern Standard Time, so we have about 3 hours left to see what Sundial is going to do. So as you can see, nothing really happened a whole lot yesterday on Monday. We did end the day a little bit down, and clearly this green candle is what we woke up to this morning at market open. Now this green candle was not, I don't want to say random, but this candle happened because it decided to wake up and bust a hole through this red line of resistance. So this red line is the downtrend red line. And typically what happens with stocks when they break trend, when they make new all-time highs, now granted this is not an all-time high, but I'm just giving you examples, when they basically break trend is you will see a giant green candle. You will see typically a breakout. Now these next two candles are not ideal because what you would have preferred to see is this be a green candle and to have it basically keep going up and use this momentum from this candle and just kind of keep going. It didn't. Bit concerning. But the good news is that at the moment it is, fallen a little bit back to earth. But as you can see, it's literally riding this line which is now support. Down here, this line was resistance, but because we broke above it, it is now support. Granted, I'm not a fortune teller. I can't tell you where this stock is going to end up down at the end of the day, but because we are above it, if it closes above 138, that's a good sign because that means that this line is now still support. Now, if we change the timetable up just a smidge, let's go to the 5-day, 5-minute chart and zoom in a little bit more. Again, we are looking at, this is yesterday, this is today. You can see exactly what happened here. This candle absolutely smoked this red line and it just kept going up. And then for whatever reason, the bears came in and said, no, that's too high, too fast. And we're kind of just chilling. Granted, this is where I'm at around 1 o'clock right now. If I had to guess, we will close somewhere above 139 and maybe 145. So that's probably a 6-cent window where I think we will end up closing, which is a good sign, I think, because, honestly, worst case scenario, we need to stay above this red line at close, which, as I mentioned, now that I'm looking at it a bit closer, is about 137 to 138. So if we close above that, good news. If we zoom out a little bit and we redraw the Fibonacci retracements on this timetable, because that's how Fibonacci retracements work, is that they are timetable dependent. You can see, if we zoom in on a little bit today, there is a 141 resistance and support level where you can clearly see this is where it is hovering. You can see up here that 148 was support and resistance, and this candle touched it and it didn't like it. This is also known as a spinning top candle, which means that the stock can pretty much go any way. Bulls or bears do not know where it is going, and it decided to come down, bounce off this 141. It didn't know if it wanted to use this as support or resistance. And then at around 12:30, it broke above it where we currently are, and it is using that. So now that I'm looking at this, I would hopefully this 141 line stays. I have no reason to believe why it shouldn't, but I also don't have any reason to believe why it should. So as far as where we can see the rest of the week going, definitely look for that 134 to be your support. If we hit 134, that's not a great thing. At least today or tomorrow being Wednesday. We can technically hit that later in the week and still be fine because this red line is a downtrend. It's going down, which means that every day the prices will be lower on that chart, because up here yesterday this trend line was way up here, but as today it's down here. So that's just kind of how it works when you move forward with a stock. But as far as the prices to be concerned about, this blue line, which is I drew at the beginning of the video, because this is support way back like a couple months ago. So this is a solid line of support. If for whatever reason it gets down to $1.10 and breaks below $1.10, that is when things can get a little bit real. That is when you have to sort of make up your mind on if you are going to continue holding this stock, because this is not a Fibonacci retracement. This is an actual price level that was put in place months ago. So if it breaks this, it's a little bit more concerning, because this will be a little bit harder to come back from. Whereas these Fibonacci retracements are more or less just guidelines and suggestions that the stock definitely plays around with, but they definitely move above and below it. So for the rest of the week, what am I thinking? Well, 125 seems to be hit because this hit in basic pre-market on Friday. This is pre-market Friday. So for the next coming week, so March 3rd through March 5th, I can see this stock trading anywhere between 125 and around 158. That feels solid. And if we break 158, we could go back up and test the 171 highs that we hit around Thursday pre-market last week. So keep that in mind. There isn't a whole lot of news going on with the stock right now, so that's why it's not really doing a whole lot. But yeah, that is my hopefully honest and unbiased technical analysis of the video. If you guys like the video, including the first half as well as the technical analysis part, let me know with a thumbs up, or maybe subscribing if you aren't already, to see more unbiased, hopefully honest stock reviews and analysis. And as always, I will see you guys next video.